So today we're going to talk about commercial mortgages and the impact they're having on the U.S. banking system. Recent news reports are talking about how a record amount of commercial mortgages are set to expire in 2023, which is putting pressure on small and regional banks that are already struggling. Smaller banks hold about 80% of all commercial mortgages, and most of these loans are set to expire this year, which is a huge deal. Now, why is this a problem? Well, during the pandemic, many office buildings and other commercial properties lost value as their tenants shifted to remote or hybrid work. Plus, high interest rates have caused even more problems for property owners with floating rate mortgages. This has all led to a lot of uncertainty and concern about the financial health of the U.S. banking system. If these loans pay off, it would be great news for the banks and the economy. However, if there are a lot of defaults, it could be a major problem. If banks have to mark down the value of these and other loans, it could reinforce fears about the U.S. banking system's financial health. A recent study found that the value of loans and securities held by banks is around $2.2 trillion lower than the book value on their balance sheets. Commercial real estate loans account for more than a quarter of this shortfall. This puts 186 banks at risk of failure if half their uninsured depositors decide to pull their money, according to the study. The good news is that banks have been lending more conservatively in recent years compared to the period before the 2008 financial crisis. So, many buildings might still be worth more than their mortgages, even if they suffer a loss in value. However, the bad news is that interest rates have been rising, which could further erode the value of these properties. Finally, regulators have given banks ways to avoid taking losses, even when loans are in trouble, and are restructured to give borrowers more time and flexibility to pay what they owe. However, this approach has its limits, and banks are still required to cut the value of the debt on their books if a borrower defaults. So what are the key takeaways here? Well, the U.S. banking system is facing some big challenges when it comes to commercial mortgages. There are a lot of loans set to expire this year, and if there are a lot of defaults, it could be a major problem. However, banks have been lending more conservatively in recent years, and regulators have given banks ways to avoid taking losses even when loans are in trouble. Overall, it's important to keep an eye on this situation and see how it develops in the coming months. Be sure to like and subscribe for more helpful financial update.